What's going on? This is post analysis for eurnzd. It's a two-sided market setup, and we're gonna just go over it real quick. Um, Starting with the daily. So what happened here was we had this trend down, and we finally reached a level. Now this does follow correlation, all of correlation for the euro, whereas doing the same thing. They all had this pin bar here, this exhaust candle, this buying pressure, indicates buying pressure. So um, let's look at the news real quick. So news came out, PMI came out better. They were pointing towards euro strength. And so yes, we do have this trend down, but we also have fundamentals saying pointing up, pointing for euro strength. And so that made me realize that there might be a setup for euro um, on top of the 1 hour correlation that I do prior to every session. Um, so we're just gonna look at this. Sorry, let's go back to the 4 hour. So on the let's keep in mind this is the um, candles I traded. So the point is this was the previous, which was yesterday's candle. All we had to do was test and go up. So on the 4 hour, we could see more detail. So as you can see, we have this downtrend, downtrend, and then you have this, all this volume just getting trapped. It popped up, as you can see, volume gets trapped. So downtrend, downtrend, pulls back, attempts, but gets just engulfed and popped the other way, which trapped all this volume. On top of that, we also have this high volume here at the end of this candle. That's good. That's another good indication. And there's volume here, and it popped up. So all this volume is trapped. And notice how the volume is here, here. That's just cash out volume. And you can see the more details here in this area. It pulls back, attempts, but just reverses completely. It pops up the other way. And so news had happened around, what was it, 4 a.m. So this is London Open, and this is, so from, yeah, this candle, so around here is whenever the, no, sorry, the news came out here. So the news came out here. So notice how it just popped up. They came and tested the London Open, and news came out here indicating that this was going to go a little bit further up. Now the point for this trade is not to go make new highs or like test any new. We figure that out as we go, and so let's go down to the 15-minute. So we're just going to bring this here. Okay, so let me actually hide this back out. So notice how we or London brought it up, and after the test, and it just consolidated. And so the point was to buy from this area as low as possible, using trying to get the best prices. And I'm just going to, this is the range here. So I definitely got a good price. I didn't use the 15-minute to enter. I used the 5-minute for more position. But the point was to buy at the bottom of the range, near as close as I could get to round numbers. So let's go down to the 5-minute, and this was actually around here. This candle I decided to enter because I didn't want to just buy blindly at the bottom of the range. I wanted to see some buyer pressure, and this came up pretty hard. I decided to enter with a buy stop order, and it just took off. Now this is where I want to get into. Um, so notice how my entry was at 750, and these kinds of trades they don't really require 930 or any real news events. Yes, we are trading around news events, but the news event happened back here, and we're just trying to continue this move up with the sentiment and the fundamentals behind us. So it was around, and it took off, and I was up pretty good profit. Um, it was around this 20, 25 price where it just started to have trouble. And looking at the 15-minute, I exited too early. I exited on this candle, as a matter of fact. I'm going to move this so we can see. Notice how I just didn't break. Now, a mistake I did was exit too early. Why? Because the bar happened at 8. And then notice how it takes off at 8:30, touches my take profit. So even though these might not require news events or 9:30, it definitely requires the market open. I might get my best prices at market open, but it really won't blast off until 8:30. Why? Because notice when 8 o'clock opens up, it's here. So they're using they use 8:30. So from 8 a.m. to 8:30, they use this time to mitigate, to try to get the best prices. You know, they're buying, selling, they're spiking, trying to get the best prices before it blasts off again. And at 8:30, it blasts off. So this 30-minute mark is when they are buying, selling, trying to get the best prices, mitigating between themselves. And so even though the trade was ready and had a good pricing, I still have to allow them to mitigate between each other in this time window from 8 a.m. to 8:30 before they start to blast off again once they do get their prices, and it goes from there. So rule of thumb, I may get better entry here, but I need to give it the time to mitigate. So that time window, um, what I could have done here perhaps was, instead of a 15 pip stop loss, I could have had a 7 pip stop loss, 8 pip stop loss, so it could do whatever it wanted before blasting off again during this time window, and eventually taking my hitting TP out round numbers at the 500 mark, or at the 50 mark, sorry. Yeah, was not a bad trade. Would have been up 2.3 Rs. Not bad, not bad at all. So we're going to get the best price, allow them to mitigate between themselves before blasting off at 8:30. So I need that time window.